Today, we are breaking the yoke of losses from your trading life. I don't care how long you have been trading and how much you have been charitably giving to the market every day against your own decisions. Every Forex trader deserves to be profitable. And if you are not yet profitable, then you have been doing things the wrong way. Number 1, you are using the wrong strategy. Number 2, you are using the wrong strategy. You will know why I said that by the end of this video, because on this day, I will be teaching you how to make your first $500 in Forex trading with a very simple strategy that anyone can apply on their chart immediately and start making easy profit within the next 24 hours. One of my students, on the first day, he joined my online mentorship program. He explained to me on how the brokers have been clubbing with his money recklessly to the point where he is almost getting in debt and really need money urgently. I first of all gave him this strategy even before I start teaching him the main trading course, so he can start recovering his money from the market. And surprisingly, in 3 days, he has already made more than $2,000 from the market. Using this strategy alone, to be sincere, thoughts of doubling his mentorship fee ran through my mind. But hey, this is decent strategy that I am about to give you for free. Smash the like button and subscribe to our channel to make yourself part of the Trading Tribe family. And as you do that, turn on the post notification so you never miss out on our trading videos and future strategies. Now let's get down to business. Every part of this video is like climbing a ladder to your success, and every bit of information is very important as you want this strategy to work for you, just like it has always done for me. Watch this to the end with undivided attention. You may want to get your pen and paper now, but hey, we are not waiting for you. Lesson has begun. In this strategy, you are going to learn how to conquer the trend with 3 different trading tools. 1. The 40 exponential moving average. 2. The trend line. And 3. The support and resistance line. These 3 powerful trading tools is what you are going to be using to make your first $500 in trading. Now you might be wondering how these tools can make you give the brokers a run for their money and revenge for all you losing trades. Let me give you the tip of the iceberg before I take you to the main Forex chart. Our major aim here is to follow the trend and make the most out of it. You dare not oppose the trend except you want your money to be used by the hedge funds and big banks to buy coffee for their staffs. Even after 9 years of trading, I am still following the trend instead of going against it, because I am humble enough to realize that no matter how much I trade with, it can't go against the trillions of dollars pushed into the market every day. Now let's understand how these tools work. So this is an uptrend. An uptrend moves in an upward direction, forming higher highs and higher lows, making buyers rich and taking out sellers. The wise traders will aim to enter the trade at this higher lows and ride it up to the higher highs. This way you can be safe in entering the market. You don't want to enter the market here, as you will be opposing the trend and the dominant buyers at this time of the chart. Though market reversals are possible, but riding the wave of the trend is safer and comes with less stress. The reverse is the downtrend, forming lower lows and lower highs. This pattern is similar to the uptrend, but here the sellers are in control. If the buyers are not on their side, they will play around with their money and use it to support other sellers. It's said that when you are in Rome, behave like the Romans. So when you find yourself in any trend, you should tag along with the buyers or sellers in that particular trend. But sometimes the trend can be confusing to identify, and that's where the 40 exponential moving average comes in play. The 40 exponential moving average will show us the current trend of the market and help us filter out the strong trends and the weak trends. This will now make it easy for us to identify the current trend of the market, so we don't go against it. When the 40 exponential moving average is moving below the market, we are in an uptrend, and when the 40 exponential moving average is moving above the market price, we are in a downtrend. Although that's very good, an easy one to identify, but we are not going to rely only on the moving average. You will see all these processes come into play when I begin to show you examples on the chart. After we have identified the trend with the 40 exponential moving average, our next plan is to find the next available higher lows or higher highs that we can enter the market from. Remember, our goal is to trade with the trend, and there is no other tool which is better to trade the trend like the trend lines. The trend lines will help you to predict future lower highs and higher lows retracement, so you can make use of it when it returns to it. This way you will be among the early birds to enter the trade from the next higher lows, like this one. A good trend line is drawn from 2 higher lows for an uptrend and 2 lower highs for a downtrend, giving us an edge that the next higher low will return to it after taking out the sellers. This combination, the trend lines and the 40 exponential moving average alone, will give us a great shot at the market. But hey, we want more assurance that the trade is going to work and bring profits. And to make sure that happens, we are going to align with the support and resistance traders. The good news is that even the big banks and hedge fund traders also use support and resistance as one of their major trading strategy. So aligning with them alone will not only boost your trading probability to a 90% winning rate, but will give us more confidence to take our trades. These 3 amazing combos is what we are going to be using to make a large chunk of money from the market. And now that you know the functions of each of these trading tools, let's move to the chart to see the examples of what we have been learning about. Now we are on the trading chart, and as you look to the right side of the chart, you notice that the market has changed to a downtrend, and that was easy to identify because it's forming lower lows and lower highs. And now the 40 exponential moving average is moving above the market. That's a clear reason to understand the market conditions, but now we need to find our areas of support and resistance and our trend line. In a downtrend, the aim is to see a support line turned into resistance, and for an uptrend, we want to see resistance becoming support. We are in a downtrend, and we draw out the area of support, which the market will now flip to become a resistance area. Why does this happen, or why does it need to happen? It's because the support line is only dominant in an uptrend. And since the market is currently in a downtrend, the sellers will always flip the support to become a resistance line to show their strength and to continue pushing the market downwards. Think of it like a continuous battle between the sellers and the buyers until the buyers take control of the market and start winning the sellers again. So now that the line has become a resistance, the market will return to it and continue moving downwards from that point, making it a critical point to look out for price action on this trend, and that should have been enough to take a trade from there. But hey, we need our last tool to boost our confidence to the highest level, the trend line. We draw our trend line from 2 lower highs to get the next lower high. Now the combo has been set. See how everything has aligned to work together for your good. The moving average was fine, the resistance line, great, and the trend line has confirmed the return of the lower high. We call this a confluence, but there is one more thing you must look out for. The entry candle. The entry candle is very important because any candle cannot work for this strategy. We will be using a pin bar and a momentum candle. What do I mean by a momentum candle? A momentum candle is a candlestick that has more body than wicks. If you have been following on this channel from day one, you will realize how much I love this candle. I cannot stop preaching about the goodness of this candle. It comes into different ways. The first way as a normal bullish or bearish candlestick, and the second way as an engulfing candlestick. Either way, it still maintains threesome character and rule, stating that the body must always be bigger than the wicks, and you must make sure the candle obeys the rule before you enter a trade. If you don't see a pin bar or a momentum candle before you take a trade, then you are more likely to lose. But hey, the plans that I have for you are the plans of win, and not the plans of loss. So you can make so much money, and who knows, maybe one day you might buy me a Bugatti or a Lambo. That being said, you can see that on the trade on this chart, there was a momentum candle at the confluence of the resistance and trend line when it touched the zone. If you see the momentum candle, then it's time to enter the trade and apply risk management. I will be telling you more on risk management in the next example. For a trade like this, which has no beautiful lower low to draw our take profit target on, it is called a free fall. So we can draw our take profit target anywhere our greed permits. But hey, I know some of you will draw your take profit target line even longer than the River Nile. I will advise you to just keep it somewhere here. But who am I to come between you and your profits? Just make sure your stop loss is few pips above momentum candle. This way we can secure our trade. Now let me show you another example. Here you can see that I spotted a nice trend moving price action with the 40 exponential moving average moving above it. And now I am planning to enter the next available bus. Then I drew the trend line. Now that I have the trend line, the next thing to look out for is the flipped resistance zone. Okay, very good. Now that I have the resistance zone, it's time to wait and be patient for price to return to both the resistance and the trend line. As a trader that wants to resist FOMO and other things that comes with it, you must make patience your best friend. Now look what we have here. A momentum candle. At this point there is joy in my soul, knowing that I have a solid opportunity in the market. At this point I will relax and take my trade, and I will do this. I place my stop loss above the last candle, and since there is good price gap before it touched the confluence area, you can place your profit target at the lower low or some few pips below it. Or you make the lower low your first profit target and then place the second one at any point of your choice. The trade was a success and take profit target hitted successfully. And this is how you will keep hitting take profits if you follow all the rules and guidelines that I have given you in this video. Though you may make a few mistakes as you practice them, which is normal, but when you stick to these rules, you will win 8 out of 10 trades for real. I never knew I would share this my winning strategy, but hey, lucky you, I can't resist helping other traders. Make sure you hit the subscribe button and show your appreciation by smashing that like button. If you got something to tell me, feel free to drop it in the comments section or chat me up on Telegram with the link in the description. In order to help other traders, just like I have done, share this video to help another trader who is also struggling with losses. Our major goal this year is to make the brokers broke, and I don't want to carry that burden alone. I have prepared a video for each of these tools I used as a combo in this strategy. In order to gain more in-depth knowledge about each of them, watch them now, and see you there guys, bye.